Okay, let's get started. Thanks everybody for joining today. Thank you very much, Enrique, for joining. I'm super excited for this conversation. And first of all, let me welcome you to the Los Angeles tech scene because you've recently moved down here to LA, and we're super excited to have you. So welcome to LA.
Thank you so much. I'm having the best time. LA is amazing.
So we're going to come back to the your thoughts on LA tech in a little bit, but let's go back. Let's kind of start a long time ago, back, yeah, to your childhood growing up in Brazil, and if you can just describe what that was like and what your first entrepreneurial endeavor was when you were young.
Yeah, for sure. So, as you said, originally I'm born and raised in Brazil. I learned how to speak English because from 4 to 6 years old, my dad worked at Ford and he was transferred to Michigan. So I lived in Michigan for 2 years and kind of picked up English since then. But the rest of my life, I grew up in Brazil. And I started my first, I would say, entrepreneurial experience was I started coding when I was 12 because there was this game I wanted to play, and it was a paid game. And I asked my parents for the money, and they're like, "I'm not going to pay for games for you because in Portuguese, the word games and gambling is the same." I think they thought it was more on the gambling side, but uh, they didn't want to give me the money, and I started, and I found out if I learned how to code, I could build like a private emulator to play the game for free and even play the game with my friends. So I learned how to code, and I built this like private emulator of this game
Did you
that
teach?
instead of
Sorry, you taught yourself just online, or you had any formal
yeah,
training at that age?
no, I just taught myself online. There's like these multi, a mix between courses and books and Google and
Mhm.
trial and error. Just spend a lot of hours during the day trying to do it. And then I built this game that was like instead it was exactly like the original game, but instead of paying a monthly fee to play it like the original game, you could play for free and buy items inside the game, like kind of like a freemium model, which is kind of like the big model for today. And it just like blew up. Like there's a lot of users that played and started paying for it. And until 6 months later, I got these legal notifications saying I was breaking some sort of patents. I didn't really know what patents were, but my mom got super upset and told me to shut everything off.
And so you're 13 at this age when you get your
This is
first
probably 14.
14.
It took a little bit to learn how to code and build the thing.
All right. Well, it's I guess take it as a compliment that you drew the attention of some angry lawyer. So your first real company that you started was just not that much later with your co-founder Pedro. Tell us about that experience.
Yeah, so fast forward a little bit, and I'll go through the rest of the story kind of quickly. But I got obsessed. I started watching a TV show called Chuck, which was like a really good computer hacker programmer, and he had gone to Stanford and he saved the world through the CIA. And I was like, I got obsessed to go to Stanford because Chuck had gone to Stanford, so I just needed to do it. And then I didn't really understand the Stanford application process. So I found this guy that was graduating from Stanford, and he was Brazilian, and he was starting a startup in Brazil. And like we did a deal in which he would teach me the Stanford application process. In exchange, I would work for him for free, and build a product. So that's kind of how I got into startups, was to working for this guy for a year. And then after a year, decided to drop out, leave and try to start my own education company that kind of failed miserably. And then I went to do this hackathon, that I tried to start another company. And then, after two companies later, I met my co-founder. None of them worked, but I met my co-founder. And we met over Twitter, basically fighting Vim versus Emacs, which are two text editors. And then after meeting over Twitter, it got too complicated to fight over 140 characters. We went to Skype, and on Skype we became best friends and decided to start a company together. And this was the first one that kind of worked out. We started a payments company in Brazil that was like Stripe or PayPal in Brazil, that did like online payment processing. And we grew that company from the two of us to a little bit over 150 employees, $1.5 billion in transaction volume. It's pretty profitable, good amount of revenue. And that's kind of like our first experience until we sold it in mid 2016 because we both had gotten into Stanford. We kind of wanted to come to Silicon Valley. So
So
we
sold,
sold it.
so drew the ire of lawyers by 14, sold first company before starting at Stanford by 18 or so. I mean, pretty pretty fast start. And one of the common threads here, I would say, is you're scrappy and gritty and entrepreneurial and hungry. I mean, you clearly demonstrated that just in your teens. So after you sold the fintech company in Brazil and you went to Stanford, at what point did you start thinking about Brex, and what's the founding story there?
Yeah, so sorry, I just saw a question here, which is like, how did your original payment processing business in Brazil differ from Stone today? Are they in the same space? So I actually answered this because it's very relevant. So I actually sold my company to Stone, and Stone's online arm is my company today. So, I think quite relevant question, and they were the buyer, and it's still, I think, we were happy that it's like a pretty big company in Brazil now, and the online is a big part of Stone. So. Made us happy.
Any regrets from having sold at that early stage, or was that the right decision for the company at the time?
Look, at the time, what happened was there was no unicorns in Brazil at that point. Like, Stone had just raised at like $500 million valuation. It seemed like, that was the biggest it was going to get. Nubank was still sub $1 billion. Like, and so it seemed for us that you couldn't build a huge company in Brazil, So at the time, we're like, look, if we want to build, a 10 plus $100 billion company, the only way to do it is in Silicon Valley. So we decided to sell it. And look, if we had stayed in Brazil, I think that company would have done super well, but I think Brex can be much bigger. So, did we sell it for too little money? Probably. But look, it was only because we started that company, we were able to execute Brex, right?
Right.
Brex is a hard company to start, and it's only because we had gone through that we decided to do it.
So where did the idea for Brex come from? And for those not familiar with it, can you describe the business?
Yeah, so what we're doing at Brex is we're doing corporate credit cards and corporate cash management accounts for businesses. So corporate cash management being kind of like a bank account replacement for businesses, and your corporate credit cards as well. And the idea came from, honestly, when we got to Silicon Valley, we actually were like tired of fintech. We're like, we're not going to do fintech again. This is so hard. We want to do something to bleeding edge technology. Like, we want to build Microsoft and Apple. So we decided to try to start a VR company, and we got into Y Combinator with this idea. Actually, it was a VR idea. Thank God they let us in. But after a few weeks, we're like, okay, we have no idea what we're doing. Like, we have no clue what we're doing. So let's just go back to fintech, because at least, like, maybe VR could be bigger, but like, at least we know what to do with fintech. Like, we kind of know where to start. So, and then look, we always, like, when we were in Brazil, we were paying out businesses into their bank accounts, right, from online processing. And we always wanted to kind of like, we're like, okay, what's the next step for us here? And the vision was like, look, we can build a B2B bank, but we never got to execute on it. We sold the company, and I think Stone is executing on it right now. And then, when we got here, it's like, hey, why don't we do that? Why don't we build a B2B bank? But it was kind of hard to start with a business bank account, because who was going to give their money to these two random Brazilians,
Well, and I mean, aren't there tons of places that companies can bank? Like, what is the problem that you were trying to solve that wasn't being solved by other financial institutions?
Yeah, there was. We just, at the time, and we still think that they all kind of suck. So we thought we could build something that's like, better, faster, cheaper, which we have. Brex Cash is that, and we have like, now tens of thousands of companies that, kind of like use them as their main cash management account and replace their bank with it. But at the beginning, we kind of like, we saw Nubank in Brazil, like doing a credit card, and like we were in YC, and our partner YC kind of like, we were thinking about he said, hey, maybe a credit card is a good idea too. And we kind of knew a lot about credit cards because we were doing credit card processing. So we're like, hey, why don't we start with a credit card, and then we can go into banking later. So that's kind of where that idea comes from. And then when we look at, there's all these startups around us that had raised like, millions of dollars and couldn't get a credit card, or, had to personally guarantee a credit card. And it's like, okay, like, they have millions of dollars. Like, there should be a better way to underwriting them than like their FICO, So that's kind of where the credit card for startups idea kind of came from. But I think since the beginning, we had a much broader vision than just doing credit card for startups. But we're very grateful that we started there because it was such an acute need that we could solve without a lot of the product being built. Like I remember when we started Brex, like we had probably 100 customers before we had a dashboard. And they were all using like a command line interface to like see their transactions, and that's how acute the problem was. So we're really glad we started there.
It's interesting. These services that have served small to medium businesses or SMEs that have gone mainstream, but started in tech, right? Whether it be, I don't know, Trello or Asana or Slack, and Brex. Like, I guess, you find these early adopters in tech that use the services. And at the time, maybe the TAM, the total addressable market, looks small because an investor might say, well, okay, sure, some startups need credit cards, but I mean, how many startups really are there? But once you find product market fit in the early adopter tech community, then you are able to expand to just any old small business. Am I describing kind of the go-to-market properly? And are there lessons for other starting companies around that go-to-market?
Yeah, I think that like one of the things that we did well early on was we were probably one of the, and I don't know if Trello or Asana did this. I don't think so, but if they did, maybe I'm taking inappropriate credit. But like, I think we were one of the first ones to market to startups. Like we had billboards all over San Francisco saying credit card for startups. And I think like startups, no one had, or at least in the recent history, had ever marketed like so explicitly like that,
Right. I agree.
So I think that helped a lot, get a really fast, like really high adoption really quickly. And I think that startups, they were just like willing to try new things, they're like, they always have this tinkering and like kind of like growth mindset of like always wanting to get better. And they're willing to take a little bit of risk to be more efficient, like you're not like, hey, I've been doing this for 10 years. I'm going to keep doing it for 10 years. Or they're always willing to learn and use new things. So I think it's just like I would say a market that they have very high demands for quality, right? Like they have like, if your interface sucks or if, there's like I think they're tolerant of bugs, but like if the product decisions make no sense, I think they're like, they have a really high bar and they won't like say bad things about you. But like, if your product decisions are good, it's just an early product or some bugs, like they're pretty good about it because their own startups have bugs too. And they kind of like understand, the process, and they're excited to be like, it's cool to be an early adopter. We get people saying to us, yeah, I was a Brex customer since like 2018, when you guys launched, with like a lot of pride. And I was like, I'm so prideful as well that, we have customers that are this loyal and are with us for such a long time, and so I think it is a good kind of place to start. And then look, because we grew so much in startups, we were able to raise more money. We were able to hire amazing people that got the product to a place where we can, sell to like a lot of different companies now. But we wouldn't have gotten there if we didn't have this love that startups had for us.
Now, how big is Brex today? How many employees? How much have you raised? How many accounts do you have, or whatever other metrics you share publicly?
Yeah, so we're a little bit over 500 employees today. We raise a little over $500 million in equity plus a bunch in debt for credit card receivables. And what we say publicly is, we have tens of thousands of businesses using it. So.
Mm-hmm. How helpful was it to be a second-time founder? Like, what did you learn from that first-time experience that made you and your co-founder and your team better this go-around?
I can categorically say if Brex was our first company, we would not have worked out. Mm-hmm. And I think it's because, Brex is not a super complex idea. I think, there's some like, insightful things, but the execution is actually quite hard. And it comes from the fact that the only reason Brex works is because we rebuilt 100% of our core infrastructure from scratch. And what that means is we didn't rely on any third-party legacy technology. And I think like, if you hadn't seen the problems of that early on, two things, like if you hadn't seen the problems of third-party technology, we would have like, okay, this seems like a good idea. Everyone tells us this is impossible to build, to rebuild a core banking, rebuild core processing. So we probably like should use a vendor. And then if you use a vendor, Brex would not have worked. Mm-hmm. And then the second thing is okay, let's even say we knew that we should build it from scratch. Like building it is actually quite hard. And the only reason we knew how to do it is because we had built before from scratch. And that wasn't by choice. It was just, there's no vendors in Brazil. So it's not like we could, pick a vendor. And we would have made a lot of like poor technological decisions, and we wouldn't have understand how to structure the banking deal, how to raise our first debt, how to have all these complex, like how to get a license for MasterCard. It's like all these complex things that would need to come together to even launch the product that we wouldn't have known how to do.
Right. The 500 employees, where were they geographically before COVID, and what are your plans now post-COVID, or kind of maybe not, we're not quite post-COVID yet, but how are you going to manage the company in this new environment?
Yeah. So we went 100% remote. So sorry, let me correct myself. We are remote first. And what that means is we're going to have offices all around, but they're going to be smaller offices, and people are not going to be required to go to the office. You just go to the office if you want to have an office as a workstation. But all of our corporate communications, we're just going to assume everyone's remote. And if you're working from an office, that's fine. And we're going to have certain rules. Like, for example, you can't have, a meeting in which there's two people in a room and then someone on Zoom. It's either all remote or all in person. Right. And the office design is not going to be designed for in-person collaboration. It's going to be designed for in-person workstations. And I think it's just a kind of a different mindset. And we thought a lot about this problem. There's a whole memo we wrote about it. If everyone's interested, you could look at the Building Brex blog, about how we made this decision. But I think the conclusion that we got, while making the decision was, look, there's going to be big companies built either way, if you're remote, if you're in person, and each of them comes with a set of pros and cons that are better or worse for your culture, right? Depending on your business and all of that. And for us, the pro of being able to hire global talent and having people live wherever they want is more of a pro. It outweighs the cons that obviously remote has. So that's kind of where our decision, and we're far from saying hey, remote doesn't have any cons. We're just saying that the pros outweigh it.
Right. That's a very intentional approach to this. I mean, I have this conversation with a lot of other executives, and I hear a lot of pretty reactive answers. Kind of, they're still struggling with it, but I like the way you've approached it. I will say one point that you made is a little different than many other companies that I talk to, which is the in-person offices at most other companies. They're optional to go to, but it seems like they're mostly designed for collaboration, with the idea of, hey, once a month, once a quarter, or for brainstormy type meetings, we'll have people go in person to these collaborative places with whiteboards and big open spaces. But you're thinking about it a little bit differently. You're saying, no, that's the place where if you want to go do quiet, uninterrupted work where you can concentrate better perhaps than at home, then that's the setting that we're going to provide to you in an office environment. That's a little different.
Yeah, I think that, our view is, look, a whiteboard. And so my co-founder says something that I think is smart, which is your tools shape you and not the other way around. So the way we learn to do brainstorming is around a whiteboard because that's what we had. But the only thing that Google Docs can't do that a whiteboard can is literally draw arrows, everything else, it's the same. So I think that in our view, we want to build the muscle in the company and continuously improve of having creativity and brainstorming and all these things in a remote way, and not have everyone always rely to go in person, because then everyone is just deferring. Oh, wow, let's wait until a date where everyone can be in person in order to do this task. And I think that, we don't want to do that. We want to be able to have creative meetings whenever we want. And it's a muscle we're going to have to build and learn and continually improve.
Right. You mentioned your co-founder. Can you talk a little bit about the dynamics with your co-founder? You guys have a very close relationship. It's so important to the success of a company. And I've seen as an angel investor, I've seen many, many companies blow up over the co-founder relationship. What is yours like?
Yeah. So look, we're going to have been working together for 8 years now. We live together, so It's me, my girlfriend, my dog, and my co-founder in one house. And so we have a super close relationship. And I think that, we're not only complementary in terms of profiles and skill sets, but I think because we started so early, we just developed in a very complementary way. So like we were probably more similar when we were 16, but then because we had to he was a better coder than I was. So he said, Enrique, go do everything else while I code because you're not going to touch my code. I kind of had to develop and become better at sales and external stuff. And he had to become better at the internal things. So the way we split it today is like, we're co-CEOs in which I'm an external co-CEO. So I do everything related to fundraising, BD, press, managing our board and investors and things like that. And anything institutional. And he manages the operations day to day. So like, like he runs the executive meeting and, all the, company processes and systems and all of that. Mm-hmm. And we do strategy and that kind of stuff together.
And it's clearly working. I mean, there's so much to like about this story. The massive TAM, the second time founder, one exit, which built a lot of knowledge for you and your team and your co-founder, and now doing it again here in the US, not in South America with an even bigger TAM. So amazing. Let's shift gears a little bit and talk about funding. When you first set out to raise money, what did you learn from that process? And I realize you, of course, were a second-time founder, but a lot of people who are watching this or listening to this as a podcast are also founders trying to raise capital. What's some knowledge or wisdom that you can impart to those that are raising money from angels or VCs?
I think a few things. So one is, I think this is probably the most common advice I give on fundraising is like, the reason you get a no is very different than the reason you get a yes. So I think like when founders are trying to fundraise, they're optimizing for, look, this VC or these set of VCs said no to me for this and that reason. Therefore, let me try to like prove the opposite of that to get to a yes. And the reality is that most investors, they say no for some, metrics reason or some numbers reason or something like that. But the reality is that, they don't trust that, you as a founder and your team are going to be able to disrupt this big market, with this product idea that you have. Mm-hmm. And all the metric stuff and all the data and everything like that is just like a way to try to prove them wrong in that sense. And I think that most founders are probably like better spend the time trying to, spending the time like crafting the story and the narrative and the vision around how they're gonna, attack this market and developing relationships than trying to like do everything to prove VCs wrong in some way. And like, so I always see these decks and they start with like these, you're like doing $1 million in revenue and you have like 12 different set of metrics, and honestly, like at this early stage, like they don't matter. What matters is, just having like a really strong vision, a really strong story from the co-founding team, a good product idea that sounds reasonable, and talking to people that, and building relationships with the investors. In my view, that's like the best way of getting to an outcome. And look, till this date, this is how I fundraise, right? Like, till this day, like our last round, we only engage with investors that were super bought into our story, our team, our mission, and everything. And then the data is just finding the right valuation, but they already had decided to invest in Brex. Right. And that's kind of the stage you need to get to is like, look, someone already decided to invest in the company and the metrics are just a way to find the right value for it.
Yeah. So, I mean, one thing that I've always found is helpful is when you get a no, basically try to draw a line in the sand with the investor. It's like, thank you so much. Totally respect the decision. Disappointed that you're not going to, proceed at this point. Just so I know, what are a couple things that you'd have to see in the future in order to change your mind? And if you force an investor to lay out what those things are, those metrics or milestones are, then you've set up a perfect opportunity to come back 6 or 12 months later, having achieved those milestones or metrics and hopefully change some minds. And I know personally as an angel investor, I've invested in a lot of things that started as a no, and 2 years later, I maybe passed on the pre-seed or the seed, and then 2 years later, I'm investing in the A. And there's an email thread of kind of all my no's and discussion, over that 2-year period with the founder, which can be pretty helpful. So I encourage founders to not just accept a straight no, instead really try to get at the why, and if possible, if it's an email, have it kind of documented. Before we run out of time, there are a couple of questions that have come in through the chat. Let's just take those quickly. So Jordan asks, during the peak of COVID crisis, I assume you had to mitigate Brex's risk by lowering client credit limits. However, this is likely when startups needed credit most. How do you balance that risk versus relationship?
Yeah, look, this is one of the hardest things about our business. And the way we think about it is we need to optimize for the global good of business, right? And so, look, we're not if we are super lenient with credit, and we get to a certain percentage of losses, all of our debt investors are going to get super upset, and they're going to start cutting our lines because we have too many losses, and then we're going to have to reduce credit limits for everyone, not just for the few that we had to do, and I think that one of the things we want to develop in the future in Brex is kind of like, for example, revolving capabilities. Right, today you have to pay your card every 30 days. In the future, like other credit cards, hopefully you could kind of keep a balance, and we could help you weather through it. And the reason this makes a difference, right, is because the interest revenue that we would get from that would offset a few losses, so we can be a lot more lenient, versus today we don't get any interest revenue, so we depend on having very, very low losses. So I think that's something that we want to develop and would help with this. But I would say it's one of the hardest challenges of running this business is making that balance, because also we had so many countless times where we actually took a risk, and we were a lot more lenient. The company ended up raising a $50 million Series B or something, and they were so grateful that we did that. So I would say it's more art than science, and we need to do it. I think during COVID is probably the worst time of all, because we didn't know what was going to happen in the world, right? If it was 2008, we kind of had to protect all of our businesses. And I think right after that, we started, after we saw there was a light in the end of the tunnel, we started being a lot more lenient, but it is really hard.
There's another question from Jared Davis, who essentially asks what impact COVID had on your business and how you managed through it.
So look, I think that COVID made people realize a few things. So one, there's more opportunities online than ever before. And I think that customers whose business is online have a big affinity for Brex. So, if you're starting an e-com business, or if your restaurant business is, food delivery and all those things, you usually have a bigger affinity for Brex than if you have 20-year relationship with Bank of America in the middle of, Iowa, and you have 2 restaurants in the 2 nearby cities, right? So I think more of those businesses getting started and more of those businesses looking for different solutions, I think helps a lot.
Just kind of growth, an overall growth in digital as a percentage of the overall economy compared with offline and analog. Yeah.
Exactly. Second thing is people realize they don't want the bank branches. People don't want to touch cash. They don't want to see cash. I think that actually helped a lot as well. And they started I think increasing trust in online services and decreasing trust in offline services that had bad online capabilities.
Now, I'm also starting to see a lot more innovation around fintech companies providing various financing alternatives for startups. Pipe is one company that comes to mind, which lets a SaaS business essentially sell off or securitize part of its future revenue streams. I mean, are those businesses competitors in a way, because they're another way that a startup can fund their business?
I think not competitive to us. As long as their funding is going to a Brex cash account, we're happy. So I think it's super cool what those guys are doing, because I think it's it's lending in the digital ways versus like the traditional like lending in the past. So I think it's super cool.
And some folks have asked in the chat, I guess you could say this of any startup really, but why haven't the entrenched competitors responded? I mean, what is Chase doing? What is Citi doing? What's Silicon Valley Bank doing? Historically, they've been the ones that have banked small to medium businesses, especially startups. Like, where are the legacy players in all this?
Yeah, I think, look, the problem with these banks is they have these really old legacy systems that are really hard to change. So anything they want to change, it's really, really, really hard. And I know this sounds counterintuitive of like, how can they just like build these features? Like how is that like just, can just, and the reality, like these are like COBOL systems of mainframes, that like to make a change, they need to go to 3 approval processes, for a small change and testing. And, it's just like a lot of complexity. So they actually can't, like, and if you ask anyone who actually works in a bank, close to, if they try to do something in IT, they'll tell you like it's impossible.
Well, and that's definitely the tech angle. And I agree with you. I guess having also been an executive at a big company, I will add that there's a lot to be, there's a business process challenge, also kind of a strategy challenge too, around a willingness to disrupt yourself. The fact that once a business gets to a certain size, there are people whose job it is internally to protect that business. So, there's someone at, I don't know, let's not pick on any one bank in particular, but Bank XYZ, whose job it is to protect the current book of business of corporate SME clients. And they're just not incentivized to disrupt themselves and to try to figure out how to put themselves out of business. So it's just, I mean, this is the innovator's dilemma. Books have been written about this. Plenty of business school classes have been taught about this, but I think you're seeing it firsthand in the case of Brex and the success that you've had.
Yeah, and look, also
in what was a super mature category. I mean, banking, it doesn't get much mature than that category. It's been around for 200 years.
Yeah, and look, and the other thing is like, if you just pick any of the big banks, let's get Chase, just to pick on them, like if they decrease their loss rates by like 1% on the overall like personal loan kind of thing, they probably make an extra couple $100 million that year, So, and that's not that hard, like compared to like reinventing yourself. So like, do I invest all these resources to make a couple $100 million with little effort, or do I go like rebuild my entire thing to compete with this tiny Brex guy,
Right. That's a great point. That's a great point. All right. Last question. And to wrap up, we alluded to it at the beginning of the conversation, but you've moved here to LA. What motivated that move? What's your take on the LA tech scene? Just give viewers and listeners some taste of your view of Los Angeles.
Look, I love LA. I always wanted to move here. I just never found a business reason to. We had offices in New York, Vancouver, Salt Lake City, and my favorite city was always LA. And I used to come here on weekends, but we never found like a reason to have an office here. And I think when remote happened, we looked at a bunch of different places and we just saw, look, this is close enough to San Francisco that if we need to go in and out for meetings or customers, investors, or anything, we can just do day trips. A lot of flights, very easy. We love the weather. And I think there's like enough of a tech scene and different industries as well to make it like very interesting. I think like in San Francisco, and honestly, I would say this about New York too, but New York's really cold. And San Francisco is just tech, and it's kind of like, you're drinking the same Kool-Aid of everyone else there, versus in LA, in New York as well. I think there's like such a diversity of industries, like entertainment, finance, tech, like real estate. And I think that, for me, I've been in Silicon Valley for a while, and, I already, not that I know everything, obviously there's a lot to know, but like I kind of already know the line of thought and, some of the things, and I'm already in that flow of information. I'm not in the flow of information with having in other industries. And sometimes I have like the most, amazing ideas by like meeting people from like finance or real estate or even entertainment.
Yeah, for sure. I totally agree. I think the diversity of the economy in LA is really interesting, and it's the intersection of media, entertainment, pop culture commerce. I mean, all of it comes together in
Yeah,
LA. And so
and
it's a great place for tech to live.
yeah, and look, I'll just say, very bluntly, there's like a bunch of people who say, "Oh, LA is like it's only entertainment. There's only like people don't work super hard and blah blah blah." Honestly, a lot of people don't work really hard in San Francisco. Like
Right,
the term like vest in peace,
right,
kind of came from somewhere. So
right. Or rest and vest.
um,
Yeah.
yeah, rest and vest. So look, I think there's like people who work hard in both places, people who don't work at all in both places, and the only thing that matters is like both are big cities. Like who's your immediate crew and who you're hanging out with, and are these people have similar values as you?
Right. Well, we're super happy to have you here in Los Angeles. .LA is happy to tell Brex's story. And thanks so much for the conversation. Congrats on all the success, and we'll be rooting for you.
Thank you so much.
Thanks, everybody.